Hello everyone. In the last video, we shared the risks in REITs and why we think REITs should not form the foundation of your investments. Today, we will be sharing 4 insights on gold to understand why gold is not a good investment. If you have invested in gold, you gotta watch on. Gold gained attention recently after rising 38.5% from its market bottom on 17 March, before correcting back to $1,900 plus for some time now. First insight, is there a scientific way to value if gold should be worth $1,000 an ounce or $2,000 an ounce, or for that matter, $100 an ounce? Is gold price a rocket science? Let's take a deeper look. Stocks or listed companies generate profits and pay dividends. These cash flow allow us to reasonably value the stock. For example, Coca-Cola generates $1.95 earnings per share in the last financial year and is reasonably valued or priced at $50 today. This means Coca-Cola will take about 25 years to make back the stock price you pay today with its $1.95 annual earnings per share. If Coca-Cola trades at $100 today, you will probably find the price unreasonable, as it would take about 50 years to make back the stock price with the same $95 annual earnings per share. With its cash flow, you can reasonably value Coca-Cola's stock price. Gold, on the other hand, does not generate any cash flow at all. Therefore, it is entirely possible to argue that gold should be worth $100 or to argue that gold should be worth $10,000. This explains why gold price movement have no center of gravity and does not exhibit the generally upward sloping characteristics of stocks. Some time back, the World Gold Council started an initiative called Gohar to try and convince the world gold can be scientifically valued. Gohar managed to convince me the general direction of gold price is statistically correlated and influenced by inflation. However, Gohar failed to address the logic or science behind whether gold should be $100 an ounce or gold should be $10,000 an ounce. And that logical anchor value is so critical to convince a rational investor to invest hard-earned wealth. Second insight, is gold a good hedge against market turmoil? This chart shows gold price declining in line with global stocks during the COVID sell-off. This is consistent with the 2008 crisis, where gold crashed more than 40% from May 2008 to November 2008. Indeed, the only consistent proven hedge against severe market declines is government bonds. This explains why all AutoWealth portfolios hold some allocation to government bonds. Third insight, is gold suitable for a serious investment, or gold is more of a speculation? This chart shows gold price declining 44.7% from $1,900 on 5th September 2011 to $1,051 on 17 December 2015. This decline lasted more than 3 years and took more than 8 years to fully recover. In comparison, global stocks have not experienced such a prolonged decline even once in the last 30 years. I hope you now understand why gold is not suitable for a serious investment and can only be a speculative bet. In fact, gold's long-run 10-year returns of 48.3% significantly underperform global stocks, which return 85.5%. So gold is not worth your chips too. Fourth and last insight for today, what drives gold prices? Can we predict future gold prices and bet on it? Analyzing global gold demand by end usage, you will notice gold price generally rises when speculative demand increases, and gold price generally crashes when speculative demand exits. So when will speculative demand exit? I don't really know. Maybe you should ask a crystal ball. In summary, gold is speculative and somewhat unpredictable. If you are a rational investor, gold is not suitable to commit your hard-earned wealth. If you can accept extremely high risk in speculative bets, like maybe Bitcoin, by all means, go for gold. Or if you feel psychologically shook, gazing at the yellow glitter, by all means, go for gold. In the next video, we will be sharing the market outlook going into the November US presidential elections. So please stay tuned. If you find this video insightful, subscribe to our YouTube channel and share this video with anyone whom you think would benefit from it. If you'd like me to talk about a particular topic, leave us a comment. Till then,